Welcome. You're watching India Market Close, and maybe a lot of you are feeling that thank God it's Friday. Not quite for the markets. It's been a tough kind of a day, a bit of volatility, a bit of seesaw. The Nifty, though, now showing some signs of recovery. Range-bound trade, a small range thereabouts, but the Nifty now about 60 points up. Sensex also not in too much action. The real action, frankly, has been on the broader indices, and we'll pull up the Bank Nifty, the mid-cap and the small-cap indices where you have seen movement. Bank Nifty having a great day today. Bank Nifty really coming into its own. We'll pull up the constituents as well. But meanwhile, broader indices feeling the pain, led largely by public sector companies. The mid-cap 100 about 1.5% down. In small caps as well, you've seen even a deeper cut. In the larger picture, perhaps not too much, but on a day when, the rest of the market is doing fairly okay, you're seeing pockets of weakness here. Let's just pull up the heat map for the Nifty first and see what's happening there. Grasim is the story of the day. It's the stock of the day. Numbers have seen that stock up nearly 5%. SBI also having a great day. Apollo Hospitals, again, on the back of quarterly numbers. So a lot of the themes today has been based on performance of the companies. And if you notice, you see banks doing well all around. So on your top row, your SBI, your ICICI Bank, your Axis Bank, all of them there. I mean, Jefferies downgraded ITC, but it's made a little difference to them. That stock about 0.5% up. On the other hand, autos are having a kind of a mixed day. M&M down about 2.5% today. ONGC also sliding. UPL continues its painful reaction to a bad quarter. But on the other hand, you've seen even an HDFC Life not doing too well at all. Let's pull up the market breadth and see how the day has been in a snapshot. And you see that kind of massive swing a little after opening, in the middle of the day, mid-morning really, that you see continuing there. Since then, the bears have sort of reigned on the markets, and you're seeing that gap continuing even now. Your advances to decline, of course, completely off 1/3 over there. So all in all, more of the action maybe on individual stocks. And I'll just pull up some of them quickly for you and look at what's happening there. PFC and RVNL are the biggest losers of the day. Again, based on their numbers, RVNL had a forgettable quarter, quite a bad quarter actually, and that stock about 8% down. PFC, on the face of it, didn't seem to have put out very bad numbers, but the street not too excited about what they're seeing. Zomato is one that we should talk about. Good house views, a lot of upgrades coming in there, and that stock about 3.5% up. Paytm continues its saga, and the RBI making it clear yesterday that any action against them was completely justified. That stock about 5.5% down. AstraZeneca and Birla Corp are the other two that I would pull up, one having a very bad day, one having a relatively good day. So stock-specific news in the market today, but Niraj, the big question of the day, if I had to pose one, is what's happening with public sector banks. I think yesterday this time they were in the opposite, not just public sector banks, beg your pardon, public sector companies. Yesterday this time the story was completely opposite.
Yeah, and such a big turnaround that's happening in PSUs. I mean, at some point of time, maybe taking cognizance of the stretch valuations, if you will. I mean, that's possibly the only reason, because we see nothing else that is caused a flutter, but people would argue that what is it that led to the kind of outperformance in the first point of time. And we'll talk about these PSUs at about 3 or 5 p.m. in great detail as well. But yes, today is a day of PSUs turning around down, and not as much maybe for banks, but for a lot of others. So look at for example, Shipping Corporation of India. Look at maybe LIC, which was down. Look at some of the defense names and how they've corrected. So a lot of these PSUs have really buckled under some pressure in trade, and that is to be kept in mind. Just want to mark 2 or 3 names before we take it to our experts. From amongst the losing end of the market on the BSE 500. So we've spoken about some of the standout movers, but there are a few stocks that have reacted to numbers. So AstraZeneca is one such, which is down about 14% and a really steep drop. You've seen what's happened to PFC, REC, RVNL, so that, and SJVN, MRPL, etc. So that's the sum and substance of what the PSU space is doing per se. And today, some of the other names like Apollo Tyres or Ramco Cements, etc., which came out in not such a bad set of numbers, have also corrected. So keep all of these at the top of your mind. But the standout feature has to be PSUs, and we'll talk about this in detail in a bit. Let us first get in our guests to talk about their views. Gaurav Bisa, Vice President, Incred Equities, with us on the show, as is Dipan Mehta, Founder, Director, Elixir Equities. We know Dipan is not as constructive, so I'll come to him in a moment. But first, Gaurav, to you. How are you looking at the trade today? Can this deepen further, this slight pain that we're seeing?
Good afternoon, Niraj, to your team, fellow panelists and viewers. Corrections have never been an issue. If you look at last 2 months also, we have seen Nifty falling 300, 400 points in a single day. What is missing is the follow-up to that. Today we had not that weakness in the benchmark indices, but for broader market indices, we are seeing them into pain. If we see Monday having another set of weakness, then probably we can say this weakness will likely continue. It may still go lower, and the pain may augment. But to answer this point would be difficult, because as I said, that there have been multiple instances where the indices have been extremely weak. They closed in low point today, and the very next day we have seen 200, 250 points bounce coming in Nifty index as well. So I would rather wait for a day to have a more concrete view than to anticipate what can happen. Second, coming back to only the benchmark indices, especially Nifty, the index has multiple supports. So you look at 21,500, where we are seeing comfortable writing happening. That was the 12 support area. Recently, we have seen a couple of time bounces coming from 21,600, 2630, and today also, if you see, this bounce back exactly from 21,630. So that is the very immediate support area. Having said that, Nifty is likely to be in the range. Just because we have seen a very strong bounce back does not mean that we will fly away tomorrow. Probably 21,900, 950 will again act as a strong deterrent. So for us at Incred, we are saying that do not be in hurry to buy or sell indices, rather be stock specific, because of the volatility part. It becomes very difficult to trade indices. Whether we're talking about Nifty or Bank Nifty, either they are gap up in a day, the other day they are gap down. So it becomes very difficult to trade. But for both indices are in a support area. Bank Nifty, actually, if it goes below 45,000, it was trying to do that. Anywhere around 44,700, I think it's a wonderful level to buy. There's a strong rising channel support here on daily charts for Bank Nifty. And from there, if those levels sustain, one can expect a swift 1,500 points upside. So I was hoping that we will see that getting broken today. But for a different reason, we have seen Bank Nifty outperforming by a very wide margin today. And it did not come towards those levels. But for me, both of them are near the support area.
Yeah, absolutely. Bank Nifty is showing a smart turn. Dipan Mehta is with us. Dipan, always great to speak with you on the show. Let's start, with your take on what's happening on two ends. One on the bank Nifty or on banking stocks, and the other what's happening with public sector companies. Do you think that a realization on how far the valuations have run off is now setting in?
Good afternoon, and thank you for having me on your show. See, I think we are seeing from our point of view a broad correction gradually setting into the market, or at least what we are seeing just now is distribution taking place. And a few index stocks are keeping the Nifty and Sensex, and some of the other mid-cap stocks are also keeping those indices on the upside. But by and large, I think we are seeing selling taking place across the board, and maybe markets have run a bit ahead of themselves. PSU banks specifically, by and large, the numbers have been disappointing if you consider them at pre-provisioning profit levels. And even the growth rates on terms of advances and deposits have been slightly lagging. Could be base effect, I'm not denying that. But on these numbers, one cannot really get even more bullish on PSU banks. Of course, there's a case for re-rating, and that process is underway. But per se, these quarter numbers for PSU banks also have been largely disappointing. And on the larger PSU basket, I think we are gradually getting into over-ownership situation. And more importantly, there's a lot of trading interest in PSU stocks per se. And these are not necessarily very strong hands or that much of a long-term view. So I think if a correction does tend to set in, or if these stocks stop to move up, then you may see further selling pressure accentuate. So I would say that this is time to be a bit cautious in the market, and let's just wait and watch, see how the rest of the earnings season plays out, and then look at entry into the market only once it is corrected significantly, maybe 10, 12, 15% from its highs.
Okay, so you're seeing a 10, 12, 15% correction going forward from the market. Now, the tricky bit about that is that people have been predicting a correction for a while, and we haven't quite seen that coming in yet, but let's wait and see where that actually falls in place. Gaurav, I want to get your view on Grasim. The numbers seemed good on the face of it. The net profit, however, declined from 2,515 crores because weakness in chemical unit, but overall the profits have risen. That stock also up. Do you see more value or more upside in Grasim today?
See, this has been a very strong outperformer. One of the few large cap names that we've seen very strong performance sort of coming in. However, last couple of weeks we have seen the stock struggling to gain territory, gain momentum. In my opinion, we can see some more upside, but I would rather wait a bit. There's a strong hurdle that we are seeing at levels of 2180. So I give away 1% from the current levels, and about 2180, it can open up a move towards 2300 kind of levels. So for me, it can be a buy about 2180. Till the time it's not sustaining those levels, I would not try to preempt at this point in time.
All right, you wouldn't preempt at this point of time. We'll take a very short break. Please stay on with us, but our eye continues to be on the market. Pfizer numbers are just trickling in on your screen, and we'll see how that stock is responding as well. Last leg of trade on what has been a fairly volatile day. How does the market close this week? We're back with all of that and more when we return. Welcome back. You're watching India Market Close. A quick look at Pfizer, which is not responding too well to their quarterly numbers. Down on all counts, revenue down 13%. I think I saw EBITDA down about 25% for the pharma company. Yeah, EBITDA down 25% at 152.6 crore rupees. Now, in a space where pharma has had a pretty decent quarter relatively, save for an AstraZeneca, as Niraj was saying, Pfizer seems to have joined that pack. Margins have also shrunk by about 400 odd basis points. We'll come back to Pfizer in a bit, but meanwhile, let's shift focus to Patanjali Foods. Sanjeev Asthana joins us now. He's the CEO of Patanjali Foods, and let's take a look at what this quarter has looked like for the company. So just the numbers very quickly. Revenues are down marginally, just really flat actually, if I'm being honest, down 0.2% year on year. EBITDA though is down about 6.5%. Margins have seen a bit of compression at 4.3 versus 4.6%, and net profit is down about 19.6%. Let's start with these numbers, Mr. Asthana, and welcome to NDTV Profit. Why don't you begin by telling us what has perhaps not worked for you this quarter?
So what has not worked in terms of the performance in this quarter are basically three key reasons. I'll come to do the FMCG first, and then I'll go to what has worked very well. One is that two businesses typically go through a very seasonal cycle, and they are the ones, biscuits, which marginally went down on the revenue, and correspondingly even the EBITDA came down. Likewise, our Nutrela, which is a soya protein business, that was marginally down, again due to seasonal factors. And third is the commodity inflation in our staples business in the foods portfolio. So due to various elements, whether it's a policy-driven or the natural commodity inflation, we had some challenges on the foods business. But what has worked very well is that our oil business, which in last 4 quarters was under a lot of stress, it has become profitable. We have made 2% margin in this. Our effort is to take it closer to 4. Our FMCG portfolio, as I mentioned, is temporarily down in this quarter. We should be able to pick it back again. And we should get back to the margin construct of 5 to 6% plus, and progressively on a targeted basis, which we want to take towards the 10% over next 4 years.
I just want to get into a bit of detail on the seasonal variations you're talking about, because you're attributing your margin compression and your profit drop to these seasonal reasons. So now for soya and Nutrela, I can understand. But what about the other aspects, and why do you think you've seen FMCG business get squeezed? Is it because of input costs, or is there sluggishness in demand as well?
So, sure. I mean, look, the three reasons why it dropped. One is, as I mentioned, seasonal factors, which we've discussed. The second is that our staples portfolio in food business is about 40% plus. That's about this quarter, it was 45%, where all prices, whether it was rice, it was wheat, it was pulses, it was partially sugar, they all went up. And which is a pretty significant, they went up anywhere between 3 to 7% in the quarter, which had an impact on the profitability. So if I were to split this further, the foods business, it dropped by about 4.5%, of which 1% happened because of the increased ad spend. We took Mahendra Singh Dhoni as the brand ambassador. So that cost of about 29 crores that we incurred, which was good, 20 crores plus that was additional expenditure. We had about 37 crores on account of the seasonal impact that we had on Nutrela and the biscuits business. And the foods business had an additional 70 crores, which went down primarily on account of the food inflation. So this at best is a temporary blip. And my sense is that overall, we should be able to get back in this quarter.
Mr. Asthana, since you mentioned it a second time, and I had this question in mind, is the biscuit business truly seasonal? I mean, to my mind, people who eat biscuits just would eat them through the year.
No, so biscuit is not seasonal at all.
Yeah.
It is just that during the winter months, there is a typicality, and especially in the the category of the glucose and in the milk biscuit category. Typically, the demand tends to slightly sober down, so it's not dramatically down; it's just marginally down. and we should be able to get it back in this quarter. So typically there's no seasonality of consumption, but typically in winter month it tends to go down. Yes.
Okay. Mr. Asthana, when I looking at the numbers, just wondering, would the quantum of ad spends that you would have done in this quarter, would you need to keep up with that kind of expenditure for maintaining sales, or was this quarter a bit of an anomaly?
So slightly more in this quarter, but I'm expecting that our ad spends will remain same to even higher. And we believe firmly behind, A&M spend in the business to, for example, both Mahakosh and Sunrich are being repositioned with a new brand ambassador. The business of nutraceuticals through the digital and on the e-com play, we are advertising. Likewise, we had new campaigns for Chyawanprash, honey, and spices that is going both to general entertainment channels as well as to the news channels. So yes, our ad spend is going to be there, and it is not just a purpose, is not just for the sake of building, increasing the sales, but also to appeal to the consumers that it's a new orientation, change packing, better option that is being provided. So we believe it is important, and we will continue with that. I mean, I'm not expecting any significant drop in this, but we probably will increase that.
The other thing is around the whole nutrition health aspect that you kind of are at the forefront of. There is a lot of homegrown brands come up. Some of them acquired by your peers. I think Tata Consumer acquired Organic India as well. Is competition stiffening there, and could that actually hurt both sales and margins? I know you would be confident about your products, but usually higher competition does lead to, if not anything else, then higher ad spends for visibility and more costs on distribution, etc. I'm just trying to understand if you believe that market share losses or higher costs could happen as a result of both of these.
No, definitely. I think, clearly we are very cognizant of the competition, both from the larger peers that we have, as well as the, smaller companies, startups, which are, sort of bringing their own competition. And they're both creative, and we are very respectful of what they do. The question is that, where do we position ourselves? So on the platform of health, nutrition, wellness, and yoga, we are pretty much right up there. And so as a right to win, if I were to look at one company which should, be right on top, it's Patanjali. And that position we are pretty confident about. So we are aware, we are, sort of fully cognizant of the competition, and we are pretty confident of our own strategy that the market will be able to not only absorb all the new sort of players, but we will continue to grow and develop as per the plan.
Absolutely. Just one quick word, Mr. Asthana, on your palm oil plantation. You mentioned that edible oil has started working for you. Where do you see that trajectory going? Because you've invested in a pipeline in terms of these palm oil plantations. Give us some sense on that.
So in this quarter, we had 4,500 hectares that was planted afresh. This momentum will, as I mentioned to the investors in the morning, in the commentary, that we are planning to do 25,000 hectares next year. So that's picking a lot of momentum. The other positive, the profile of our plantation is also constantly improving. So now nearly 30% of the trees that we have planted are between 0 to 3 years, which means they're fairly young plants. And we will keep getting them on stream, which means they will start fruiting from the year after next year. And we're expecting that will add immediately to the bottom line, because that business is almost, it's like an annuity business that works for us. So we are pretty confident that, the oil palm plantation, as committed, we will do our 500,000 hectares. We will, start to sort of gaining the benefits from 25, 26 onwards. And thereafter, it will continue to pick up momentum. So it's a pretty good business to be in. We are going through the hard work of sort of putting all this together. And then the benefit will accrue over next 25 years.
Absolutely. So that's which is why we wanted to wrap this conversation on that note. Thank you so much for that, Mr. Asthana. So seasonal pressures have had an impact on this quarter, but I think the forward-looking story with Patanjali Foods is definitely their palm oil plantations in a fairly high-margin business. Quick word with Deepan before we let you go. Deepan, your outlook for Monday, and I want to get your take on the FMCG space as well. It's a bit of a curate's egg this time round. ITC, of course, under pressure with British tobacco news. But overall, do you think an upswing is likely here if there is a bet on consumption improving?
No, not really. I think, FMCG per se have been disappointing right from HUL to ITC. Even Nestle's numbers I thought were pretty okay. And the segment as a whole now is growing at mid to slightly high single digit, with greater risk of the growth rates going to below single digit. And a lot of the profit growth has come in this quarter and last quarter because of lower raw material prices and expanding margins. And I don't think that is sustainable going forward. A growth company cannot just keep on increasing profits to lower costs. At some point of time, the top line has to grow, which has not been the case for FMCG stocks. Maybe a lot of the categories have reached maturity. So from a consumption point of view, now investors need to move away from FMCG to some of the other, I would say, so-called sunrise sectors like entertainment, travel, tourism, hospitality, medical care. These are the segments where we are seeing more traction. And of course, those segments also will have their cycles. But by and large, over a long period of time, 5-10 years or so, they could offer good returns. So I'm very positive on consumption stocks. And at corrections, these are great stories to buy. Especially retail also looks quite interesting. I know Trent came with a good set of numbers, but for the other retail companies also, I think after 2-3 tough quarters, could see a turnaround around next year also.
Okay, Deepan, you've stuck your neck out and called the view that you have. Let's see how it shapes up. But all the best with your investments, and thank you so much for speaking to us and giving us your thoughts. That's Deepan Mehta with his thoughts. Gaurav Visa, just very quickly, we haven't been able to take your stock ideas. Could you share them with us? 30 minutes left to trade.
The first recommendation would be buy on Bharat Forge. If you look at the charts overall, we have seen very strong uptrend coming in. There's a swing high breakout on daily charts, which will be confirmed on a close above 1290 today. And the stock has seen fairly decent volumes as well. So in all likelihood, we may see some more upsides going in. Auto space overall, auto index overall has been outperforming. That can also help. So I would recommend buying Bharat Forge at these levels. One can keep a stop loss of around 1280 and play for targets of 1360, 1365. Second would be a sell call on SBI Life Insurance, where we've seen last 3 occasions SBI Life on weekly charts have come around 1490 and witnessed very strong corrections sort of coming in. And there is follow-through selling coming in SBI Life even at the current juncture. So keeping a stop loss of 1490, one can sell SBI Life for target price of 1350.
Okay, Gaurav Bisa, stay on. Much more to talk about before we slip into a short break. Let's look at the LIC stock. Now remember, that was trading with cuts of about 2.5%. Actually was down even lower maybe, but also hit the record highs earlier on. We spoke to LIC's chairman. In fact, my colleague Sajid spoke to LIC's chairman Siddharth Mohanty on whether the company can sustain the 20% VNB margins going ahead. Listen into what he had to say.
At the beginning, when we go for listing, we told non-par share will be at least 15% in AP, and we are almost there. We have crossed 14%, and if you see recent result also, will definitely, and by March it will be much more. It will be much more than 15%. My sense is it will be much more. So definitely that will give a better margin.
The story of this afternoon is the bank Nifty. Please pull up the intraday chart and look at what's happening there. That index now about 1.5% up and having a great day. Agam is standing by on the F&O side of things. Is that trend sort of being reflected there as well, Agam?
Yeah, certainly. So what's really happened as far as the bank Nifty is concerned is about a short covering, and I'll come to that in just a moment. Before that, let's address what's happening with the key benchmark. So the Nifty has advanced by around 0.3%, and we're seeing unwinding of positions. So we are seeing about a short covering, so to speak. Do remember that Nifty has come off from levels of around 22,000. So a lot of your older shorts are being covered at the moment as we close into the week. Speaking of the bank Nifty, remember it has had a very, very sharp fall yesterday from its intraday highs, and in fact it lost by as much as 1.8% yesterday. Now today we are seeing a little bit of a recovery through that, and as indicated by the decline in open interest, we are seeing short covering in the bank Nifty too. What about the options market? Let's pull that up, and we have seen not too much traction as far as options go. Well, it's again we're at the start of the trading week, and we will have options, weekly options expiries towards Wednesday, Thursday for the bank Nifty and the Nifty respectively. But as far as the range based on Nifty goes, we're still looking at a 500-point range between 22,000 on the higher end and 21,500 on the lower end. Well, marked by maximum open interest in those respective calls and puts. Talk about stocks, and at the moment we will start seeing a lot more traction in PFC. It's down by around 8.5%. I reckon this stock will be on everyone's mind because of the stupendous run it has had through the course of the last 12 months, and I reckon that based on that we are now seeing some fresh shorts added into the system as well. Besides that, of course, we are looking at longs in if we could just go back to the open interest gainers. Yeah, so we are seeing longs in Sun Pharma and Z Entertainment. Z Entertainment is another curious one because we're seeing a little bit of a reversal of trends here. And now let's talk about those stocks which are seeing unwinding in open interest. Let's pull that list up as well and see where that has been. Short covering for UBL, of course, reacting to earnings. Cummins India as well as Lupin, and Biocon and Hindalco showing a bout of weakness here, where we are seeing some amount of longs unwinding from earlier sessions. That said, well, I reckon that we are slotted for a little bit of consolidation as we move into the week. Do remember that that's also the final week when it comes to this earnings season, and that's something I'm sure a lot of us will also look forward to be honest. But it could also perhaps induce a little bit more volatility, considering some of your weaker earnings also tend to come through in the last leg of that. So we'll be watching out for that too.
Yeah, well, that's a fair assumption too. Thanks a lot for that, Agam, and some interesting names out there, including the likes of Cummins, etc., which have, one came out with numbers which were very strong and did well then. And today, in an otherwise sideways market, the Cummins has actually held out as well. Hemang Jani Johnson on the fundamentals with his thoughts. Hemang, good having you. Thanks so much for joining in. What did you make, Hemang, of some of the numbers that have come out from the cap goods space? For example, Cummins surprisingly did well, or cap goods stroke machinery. We've seen ABB and Honeywell Automation also delivered fairly decent numbers. In ABB's case, maybe slightly lower than estimates, but YOY numbers didn't look all that bad. How do you like, or what do you think about some of these?
So Niraj, good afternoon. Thank you so much for having me. This is my, I think, first interaction with NDTV Profit.
It's our pleasure, Hemang.
Great.
It's our pleasure.
Yeah. So Niraj, I think cap goods as a space, that's been a big theme. And when we look at the numbers, L&T numbers were not so great. A bit of a pressure on the margin. But when you look at the other companies, particularly, Cummins was a outlier, and both the performance as well as the commentary was looking much, much better. So we are seeing, incremental impact in terms of price moves. Also, ABB, Siemens were reasonably decent set of numbers. Thermex was also reasonably good. So I think the fact of the matter is that as a theme, people would still like it. The order book wise, the visibility wise, things are looking better. If I have to pick something, I would surely go with L&T, and to some extent Thermex, because that is where we think that a large part of the growth will, come in terms of, the segments which are doing well.
Okay, fair call. The other aspect is, of course, viewers, and we'll talk about what's happening to PSUs in a moment, but I think PSU banks in particular, which we're not going to talk about, have had a slightly indifferent day today, but has moved back into the green. Hemang, if you had not invested into PSU banks thus far, would you go out and make a call now? Some of them are still available at maybe not so high a valuation still.
I think, Niraj, the entire PSU banking space, just to give you the perspective, last 1 year, the PSU banks, and the index is up almost about 72%. The bank Nifty is up only 10%. And, and Nifty is up almost about 25, 26%. So there's a massive outperformance. People who have missed out, my feel is that looking at the current valuations, looking at the growth, things are not out of whack as yet. So maybe a BOB, Canara Bank, these are the names that one can surely look to buy. And it would be good to kind of look at buying on a bad day where you have a small correction here and there. But still, I do see a case for another maybe 20-25% kind of an upside over the next 1 year for some of the PSU banks.
Hemang, hi, good afternoon. Tamanna here. Pleasure to speak with you on NDTV Profit. We spoke a bit about PSU banks, but let's talk about the public sector companies overall and the kind of drubbing they're getting today. To be fair, PFC and REC are leading the charge. Were you seeing this as an outcome of numbers or profit booking? How do you look at the crack that we're seeing?
So, Tamanna, good afternoon. I think it's fair to expect some degree of correction when you have seen such a massive up move across the PSU, namely defense, railways, and cap goods, mining, whole host of companies, right? So PFC, REC, I think, maybe numbers could be a trigger, but I think at some point stocks will go through their own sort of consolidation and corrective phase. Our feel is that as a theme, it will continue to do well. Still, PFC, REC are not looking too expensive on dividend yield parameters, on price to book parameters, and growth visibility all combined. If you see a deeper correction like what we are seeing today, I think one should surely look to accumulate. Maybe, it's a matter of a few days or weeks before you could see the revival again.
I want to take that question to Gaurav on a PFC and REC. At some point, do you see an opportunity to come in here, Gaurav, or is the pain going to be deeper?
Well, PFC and REC have been at the forefront of this PSU cycle, and they've seen a tremendous upside. We gave at 140 adjusted to the corporate action, and we got out at 2.58, something around those levels. And from there also, we have seen very strong upside sort of coming in both REC and PFC. It is just that we have seen 10% correction today, right? And before that, we have seen the stocks becoming 3x, 4x, even more than that. So I think one is having more panic than what one should ideally have. I would not recommend buying here because the correction is still not very steep. If something has moved 300%, 400%, 500%, a 10% correction, I think it's very minuscule for me. I would rather wait for some more declines to add. For trader perspective, I mean, any move towards 370 is what one can look at. There's a good support at those area. So if it corrects to say even 380, I would keep a 10-15 point stop loss and play for an upside. But at the current juncture, I would avoid it.
Okay, so yeah, and strangely, I mean, there are some people who are still calling about how probably these are the stocks wherein the quantum of growth looks so strong that they might still be a good place. Power essentially, but today PFC, SJVN, NHPC, REC, all of them have corrected in trade. Frankly, we don't get into too many details, but if you just look at some of the PSUs and just compare the price to book or price to earning multiples currently versus 10-year averages, it gives you a sense of how stretched the move in some cases was, never mind the growth rates, and therefore maybe, just maybe sometimes, the market just pays cognizance to that. RVNL is the other one, which has corrected quite a bit today, 7.5% higher. There's been a lot of skepticism, Hemang, and then I'll come to Gaurav as well on this, around the swift run-up in the rail stocks and how one should be careful. Now it moves from railway wagon manufacturers to financiers to everything else. Are you a bull out here, or are you a skeptic?
So Niraj, when we try to look at these companies purely from a fundamental perspective, things would not look good because of the run-up valuations and, historically how the PSU as a, company or sector were regarded as. But, if you're a momentum player and if you are looking to participate for next, let's say about 3 months or 6 months, then I would surely think that this is a pocket that you need to be in regardless of the stretch valuation. So within defense names, something like a BEML or HAL, Bharat Dynamics, these are the companies where we think that there is some more steam left. And you should look at these more as a momentum play or tactical opportunities and not necessarily as a, investment bet for next 2 to 3 years.
Okay. Gaurav, like I said, I would like your views on these as well. What about some of the railway stocks? How do they look on the charts? I doubt any of them are majorly in the derivative side any which ways, but could you explain?
Apart from IRCTC, I don't any stock being part of the F&O business. But overall, if you see the stocks that are always on the radar, likes of RVNL, IRFC, Ocon, we had recommended them long time back, and we were riding it. And we are still riding. We have booked a good part of that chunk for our clients, but we have not exited everything. So the story is good. The trend is good. The stock themselves are good. But and even if somebody has a horizon of say 2 years, 3 years, 4 years, that's a good theme to be in. However, when you are bullish on one particular theme, that does not mean you buy a stock at any level just because you have a 2 year, 3 year, 5 year perspective. So on that premise, I'll say I'll wait for a correction. These have moved up 4%, 4 times, 5 times. So there has been 500%, 600% upside. Like I said sometime back, a 10%, 15% correction is just too small for me to take a bet, because on monthly charts, it is a vertical rise. And when there's a vertical rally, getting supports becomes very difficult, because every month these stocks have added 10%, 15%, 20%. Every month has been a positive close. So how do you arrive at supports then? So for me, buying is a function of the expected targets and the probable stop losses. If I don't find a stop loss inside, I would rather skip it, because there are always going to be opportunities. I don't want to chase something with nothing inside.
Right. Just 2 sets of numbers that are out right now, Easy Trip Planners and Hutco. Let me talk about Easy Trip first. On the face of it, maybe a so-so quarter, because your margins are down about 261 bips. So we'll pull up Easy Trip and see what's happening there. So yeah, that stock taking a bit of a tumble, about 4% down. Revenues are up about 18%. EBITDA is also up. Net profits are up about 10%, but margins have been squeezed. Hutco, on the other hand, and we just have the first cut of the numbers, but that seems good, and you're seeing that stock beginning to perform. We'll pull up the intraday as well. The first number we've got is a total income up 18% nearly, and a net profit which has pretty much doubled. So Hutco seeing a sharp spike over there. Gaurav, I'll come to you. Any of these two that you track?
Well, I do track, but just like other PSU stocks that you've seen, we had a very strong rise. The breakouts were at much lower levels. At the current juncture, I don't see a merit to buy these names. There's nothing wrong with the business models or with the chart structure, but they have had a very, very strong upside. So we are avoiding buying these names at this point in time.
Hemang, I want to come to you on the whole play, a bit of which we've been seeing end of last year, also from the budget, and probably you'll see that rhetoric increase ahead of elections, etc., which is big run-ups on government schemes. Now, whether it's a HUDCO because of a housing for all push, or whether it's the whole set of solar energy powered stocks, are these long-lasting stories that you would buy into?
No, Tamanna, I think there is surely a lot of action, a lot of interest, appetite for the themes that you mentioned, be it renewable energy, green energy, some of the companies like HUDCO, defense names, etc. So I think it would be good to have some allocation, notwithstanding the fact that the stocks have run up, or the theme is now pretty much known. Because when it comes to certain themes, it can really surprise you in terms of how much earnings and how much growth it can deliver over a period of time. So surely, I think renewable energy is looking like a space where one would really want to have some allocation. HUDCO, because the run-up is so strong, and I don't see any great differentiator in terms of what HUDCO would be able to offer vis-a-vis some of the other housing finance companies. So I would not go with it, but within the PSU broader category, you will always find some exciting stories, and one would surely want to invest, maybe not necessarily at one go, but maybe in two parts.
All right, let's talk about another very interesting company. Yes, in the broad PSU basket, but LIC is a story of its own. Their numbers this quarter have given hope. Net profits up 49%. And overall, it has been a well-performing stock. We spoke to the management today, and we'll play out a clip of that as well. But Hemang, I was keen to understand your thoughts on LIC, because it has been a long struggle for this stock price to come to its IPO number. And now it does seem to be an upward trajectory. But would you have faith in it, considering the relatively less float available?
So, Tamanna, what a remarkable turnaround that we've seen for LIC in the last 2-3 months after the debacle that it had post-IPO. And I do think that since the theme is catching up so very well, this looks like a value play, even when it has already run up quite a lot, because on many parameters, when you look at the company, particularly price to book or enterprise value to book or embedded, book value as we call it, it is looking quite cheap at about 1.3, 1.4 times embedded book, and the numbers were reasonably good. And I do think that this is one company where you will see a fair amount of growth in terms of annual premium collections and most of the other parameters. So I would surely like to go for it, maybe because since Prime Minister spoke about this name and the way it has run up, you might see a little bit of volatility here and there, but it surely merits to be part of the core portfolio.
This price, Gaurav, would you have it in your core portfolio at 1,081?
See, I would start buying it for the simple reason that whenever we have seen the IPO prices being crossed and sustained, it generally leads to swing high breakouts, generally leads to start of flash uptrend. So in that perspective, I do believe that there can be some more upside that can be seen. However, if I wanted to buy, say, 100 shares, I would not buy 100 shares right away. I would wait for declines to add more, but overall structure remains positive. So I would start buying, I would start creating a portfolio, but not by the entire quantity.
There's some numbers on your screen, GMDC, and the numbers leave a bit to be desired. I think this is the second quarter in over in GMDC. The reported numbers haven't looked that great. Remember, a stock has an optional opportunity of rare earths at some point of time in the next 2 years. The numbers going ahead will look very strong, but based on projections done and the mines coming on stream. But 2 quarters or 3 quarters in a row now, the numbers are flattered to deceive, and the stock is duly correcting about 11% lower. Before I take the closing strategy from Gaurav, Hemang, do you particularly look at GMDC fundamentally? Because it's a sharp miss, 56% downtick in PAT for a stock which may not be expensive but has rallied quite a bit of late.
Niraj, I believe they are making PDA and some of the chemicals, and this time around, one of their product, there was a planned shutdown in which kind of would have some effect. Also, the TDA pricing has not been that great. So if I have to pick something from a state PSU kind of a category, I would surely go with the Gujarat State Petronet, where we see a much better story in terms of LNG and the holding company, or something like a GNFC, where the pricing is to their advantage, and we do see your value over there. GMDC is something that I would avoid at this point.
Okay, avoid at this point. A fair call. Gaurav Bisa, before we let you go, your closing strategies.
See, as far as indices are concerned, as I said, I'm not too keen in at the buying or selling indices at this point in time. However, if somebody wants to look for a stock, I think ACC is one that would be on the radar. It's confirmed a bullish parent, or you can also look at it as a bullish flag pattern breakout on daily charts. You can keep a stop loss of 2580, play for target price of 2700.
Okay, 4.5% higher for ACC, and that's not a bad spot. Gaurav Bisa, we'll let you go on that note. Thanks so much for taking the time out and being with us. Hemang, can we wrap this conversation by talking about cement, because those almost every single name has come out with very reasonably strong numbers, if not very strong numbers. So, is it a pocket that is worth looking at even now, and what within that?
I do think that by and large, the numbers have been good, and typically, in a period where you see the elections and generally infra as a theme catching up well, cement tends to do well. The good part about the sector is that the crude prices have not shot up, so there is no undue pressure on the margins per se. In terms of the stocks that one would really look at, the large cap, clearly there are two names, Ultratech and Ambuja Cement are the ones that we like. Apart from that, I would be comfortable buying into a JK Lakshmi or Dalmia Cement. These are the two names that we prefer in terms of the mid-cap companies. Surely, it would make sense to have some allocation for this sector at this point of time.
Hemang, just one last point from you on the strategy going into next week and what you would do with banks. Because Bank Nifty, at least at close, has shown great signs of life, and you've seen a drubbing in some of these stocks over the time. Anything you like in private banks, or would you stay safe with the PSU bank pack?
I do think that one should have decent investment into private banks, be it ICICI or Axis Bank, because you can't really all the time play momentum game. Investment is not about just buying something which is performing. But if you look at the numbers, yes, there was a bit of a disappointment when it comes to HDFC Bank, or certain banks did not deliver on NIM's front. But in terms of the earnings growth or the kind of balance sheets that they have, they do look quite attractive to us. So surely, because they have not performed so much in terms of valuation, they are far more attractive. I would surely go with ICICI Bank and Axis Bank.
All right. So ICICI Bank, Axis Bank is something that Hemang likes. Hemang, thank you for joining us. Great to have you on NDTV Profit, and hope to see you back again soon. And ICICI Bank and Axis Bank have actually not been having such a bad day at all. Let's look at how markets are closing down. Just a couple of minutes to go, and Nifty has remained true to its path through the day. I would say has recovered, in fact, from some of the lows. So not a very scintillating close this Friday, but nevertheless, we look like we're closing in the green, which was looking difficult at some point of the day. But really, the star this afternoon is the Bank Nifty, and looking set to close about 1.5% up. Let's pull up the advanced decline through the day and look at what this day has looked like, where you saw a dive mid-morning, but you seem to be closing that gap, at least to some extent narrowing that gap. It's the broader indices which is showing you or is reflecting in these advanced decline statistics, because while the Nifty and Sensex is doing okay, the mid-cap and the small caps have definitely been having a rough day. A lot of them led by the public sector company pack. And we'll pull up the top components of the Nifty small cap 250 if we can, the top losers, and look at where the pain points points are over there. I'm talking about the top losers though. The top gainers are on your screen as well. But, you have seen, and yes, no prizes for guessing. PFC, REC both have done quite badly. Now, were the numbers that disappointing is the question, or is this sort of a profit booking that we're seeing? Ramco Cement's also down about 8%. If you look at AstraZeneca, you'll probably see a sharp cut over there as well, as we've seen with NHPC, GMDC. Numbers came out just a short while ago, not looking very good. Look at AstraZeneca down about 13%. Let's see what Hutco is doing as well before we go any further, because Hutco numbers came out and they were looking fairly decent. The spike has come off, but they're about 2.5–3% up. But a quick look at your Nifty heat map as well while we're at it, and what the broad market has looked like. Grasim getting rewarded for a good set of numbers. SBI having a superb day today. Apollo Hospitals again because of numbers. We talked a bit about private banks. Look at Axis and ICICI at close, about 1.5–2% up. Pharma as well, apart from maybe a Pfizer, which had bad numbers, Pharma overall has been great, and Sun Pharma, Cipla showing that. M&M and Bharti continue with the weakness. ONGC has been in a bad spot through the day, in fact, and that continues. UPL as well has been looking like quite a poor show. I want to just pull up the PSE index, the Nifty PSE index, to reflect where the culprit is. If you're looking at what's happened in the broader markets today, it's the public sector stocks, and they're 2.5%, nearly 3% down. And if you pull up the components of the Nifty PSE, you get a better idea of where the pain is. So, of course, your REC, etc., has been poor, but even Power Finance, PFC, and Indian Oil and Engineers India, all of them, NBCC, all of your gainers of the last few days have seen quite a bit of pain. So as we wrap up what has been a tepid close to the week, we look forward to a lot of action next week. Your quarterly results will start winding down, and you'll see a market hunting for new triggers as well. But for now, that's all the time we have. From Niraj, me, and the entire team that's put the show together, thank you so much for watching.